Hey everybody, happy Thanksgiving week. We were reading the NAR October home sales data this morning, which shows strong pricing and demand, but of course, that's nothing surprising to you if you pay attention to the Altos Research data and these videos each week. But I will share some insights and how to read the NAR data as we look at the market, how it is here at the end of November 2021. Each week, of course, Altos tracks every home for sale in the country, all the pricing, all the changes in pricing, the supply and demand, and we make that data available to you before you see it in the traditional channels like NAR, for example. Median home price in the U.S. this week is $384,459. That's down a fraction from last week and up 10% from a year ago. Last year, the market kept powering straight through the holidays. So year-over-year comparisons are actually kind of tricky right now. It was so strong at the end of the year last year. The median price for the newly listed cohort, that's the light-colored line here, is $354,000. That's down just a smidge from last week. Remember that the price of the new listings is the leading indicator for the whole market. And so far it's stayed elevated well into the fall. So I do expect the next 5 weeks to see that tick down from here to the end of the year. You can see the annual low points repeating in the price of the new listings, the light colored line here, each year. As I mentioned, the National Association of Realtors today released their October sales numbers. And there were a couple things to note. NAR today reported that October home sales prices were up 13% year over year. Now, the NAR readings are more up to date than, for example, the Case-Shiller, whose most recent release is still reporting for August at like 17% year-over-year gains. But of course, if you've been paying attention to Altos, you'll note that we are now showing the year-over-year price growth slowing from the peak of the frenzy back in May. So in May, we were reporting 18% home price gains year over year. By late summer, we were showing about 13%, and now it's about 10% year over year home price gains. So home prices are up 10% from last year at this time in our analysis. Because the actual sale lags a month or so or more behind the active market. So the home is on the market now. It gets an offer in December. It closes in January. You'd see the NAR report that comes out at the end of February reflect what we're seeing now in the Altos data. The thing to learn here is that if you're interested in that NAR monthly reading, you should look at the Altos data from a few months prior to get the predictive power. The active inventory of unsold single-family homes dropped by over 2% this week to 385,000 homes. That decline is totally normal for this time of year. Last year, we were at 514,000 homes, which that was a totally new territory. So the pattern of seasonal inventory trends seems like it's back maybe on a normal shape, just shifted by 500,000 fewer homes. Because of that normal shape, we continue to forecast that we'll end the year just under 300,000 homes. What's unclear at this point is how 2022 starts. Is it this normal seasonal pattern where inventory starts to build in February and definitely in March? Or is it more like this year where inventory kept dropping through the end of April? So, like I said, I suspect that it's the former, a more traditional seasonal pattern. Only because it's so hard to imagine the market functioning properly if supply gets even further restricted. It sure seems like that a repeat of last spring with that demand, and we would that level of demand would pull more supply available. I don't have any way of forecasting that more precisely yet, so it's just an assumption that we're back on a more seasonal pattern, and that inventory would start climbing in February and definitely in March. When we look at the demand side in our immediate sales tracker, we've flipped the analysis on this chart this week. Previously, we've been sharing immediate sales as a percentage of the new listings. Of all the new listings, 25% are being sold essentially immediately. This week, we flipped the chart to show all of those that went into of all those that went into contract this week, what percent were immediate sales. So what we can see here, the light colored line captures the immediate sales of all the new in contract this week, the new pendings this week. Those the immediate sales, of course, are those that got listed and then took offers essentially immediately within hours or just a couple of days. Immediate sales have always been a little bit in the market, of course, but because they became such a notable phenomenon this year, this is why we started tracking them explicitly this year. So you just see the data in this year on this chart. The thing to notice, though, is how the total volume, both lines put together, have stayed unseasonably high. If we tracked it last year, you would have seen the same thing in the second half of last year. This is one way of illustrating the unrelenting consumer demand. So as of right now, 20% of the properties going into contract are these immediate transactions. By the way, we call this absorbed here because these properties are not yet sold. Contracts fall through, properties get relisted. This absorbed measure is the earliest proxy for sales that will happen in the future. Also on demand, we can keep our eye on market time. And we can see that the days on market isn't really climbing yet. This pattern is normal for this time of year. It's just the speed on the market that's different. So days on market will continue to climb for the next 10 to 12 weeks. Time on market peaks in February because you have stuff that sat on the market over the holidays and hasn't moved yet. But then we get new inventory in February and March, and that starts to bring the total transaction time down. This pattern is another one that's going to be fascinating to see in the spring. How quickly does days on market fall, and how low does it go during that peak buying season next spring? It's hard to imagine a scenario where days on market suddenly surges back to the old level. It's more likely that we will get a slow adjustment over a couple of years back to the old market time. The bottom line here is that right now, all the data is pointing to tight supply and strong demand well into buying season next year. Okay, that's all the data we have time for today. Home buyer demand is remaining plenty robust as we approach the holidays, and as a result, home prices are not really slowing at all. If you're a realtor and you're working with buyers and sellers right now, or you want to help them take action in the new year, they need to get the data from you. To do that, I recommend you go to altosresearch.com and book time with our team. There is a link in the description below here. Click that right now. Also, don't forget to subscribe to the YouTube channel so you get these videos each week. Have a wonderful holiday, everyone. I am grateful for your attention. Back next week.